All right, what is up, tycoons? What's up, traders? Super excited for today's video. We got to take a look at XLF, okay? And the reason we're going to be looking at XLF obviously is going to be the bank crisis that's going on right now. And, I think personally that things could be getting a lot worse. Now, of course, this video is not financial advice. So, do your own research, consult with a financial advisor before making any, decisions, any big decisions. But we're going to go over my thesis on where possibly XLF, the financial sector, could be heading in the stock market. Right. And I'm going to give you a couple of reasons why. Now, a lot of people are comparing this to, '08 and the great financial crisis. And there's a lot of people out there that are saying, oh, well, the banking system is much more efficient now and it's a lot better. And, we're not going to see that. Right. Well, the big question to me is, how is this even possible? Right. How are we having things like Silvergate, Silicon Valley Bank, Signature? If you look at other banks, Ally looks like crap right now, ALLY. There is a lot of, worry in the financial sector right now. And a lot of it's due for good reasoning, right? But there is a lot of people out there saying that, hey, this is just a fluke. And, now that the Fed is backing things up, we're going to be okay and everything's going to be okay. This isn't going to be like '08. And that's honestly like the worst thing you can hear from a bank or the finance sector, right? Is everything is fine. Take a look at what happened with FTX, right? And, Sam Bankman-Fried, like the day before, oh, everything is fine. We're not going bankrupt. And then boom, the next day, bankrupt, right? So, and it's not just like FTX and things like that. It's plenty of other stuff. So you really have to take into consideration, what's really going on behind the scenes. Now, I just dropped a TLT/market update video going over a few things. But what I want to do is go over the technical analysis right here on XLF. We're starting here with our daily chart. I'm going to zoom in a little bit more. But what we have right here, these are the major fib retracement levels. So that's what these yellow lines are, the retracement levels. And typically, things don't move in a straight line down or in a straight line up. You get a move down, retracement, continuation of the trend, move up, retracement, continuation of the trend. So that's how you use the fibs. Now, you can also use it to spot reversals. If you move down, retrace, consolidate, and then break through those levels, you can spot an upside reversal. And if you move up, retrace, consolidate, and break through those, you could spot a downside reversal. So to help you visualize that some more, here we had a downtrend, a retracement up to our 61.8% level, and then we continued that trend back down lower, right? And so what we've done now is we've taken our new swing high that we put in here recently before this collapse, and that's going to be right up here, all right? And we put in our new swing low, and we're in the process of a healthy retracement, right? So XLF could head up to about 32.94, even all the way up to 34.21. That really wouldn't surprise me. Okay. If we do that. But what makes me think that this is just a healthy retracement to ultimately continue going lower is the volume, right? If you take a look, volume should be going up based off whatever trend, right? That's going to help you identify if it's a strong trend. So if price is going down as it was here and volume is going up, then that indicates that this is a strong downtrend. And you can see, we had rapid price movements to the downside. Well, since we've started to actually rally in the past 3 trading days, volume has gone down, signifying that this is a weak uptrend. Okay. And there was a little bit of a reason for a bounce when you look at the RSI. That's what this is down here, our relative strength index. We had some bullish divergence, okay, where we have a low here, a lower low here, but we have a low and then we have a higher low. So we've actually been building relative strength while the price has been declining over the past week or so. And rightfully so, we're starting to see a bounce now. Now we gapped up today, creating this gap down to fill on XLF, which is right around 31.46 at the bottom of that gap. But we could continue heading up higher before heading back lower, right? And so 32.45 is going to be a big resistance level I'm paying attention to, and then 32.94, 33.57, all right, as well as 34.21. We could come up and retest any one of those zones. That's why I have these arrows here. We also have a long-term trend line here, this green trend line, which we're going to zoom out now and go to the weekly chart real quick. All right, and show you guys what I'm looking at on the weekly chart. So on the weekly chart, we broke this very long-term trend line that we had that we were using as support. Okay, and we're actually this 38.2 level right here of 32.45. This is actually from our swing low to our swing high for the overall trend, right? So if we zoom out to the past 3 years, this is the 3-year low of 17.49, and then we have a high up here of 41.7. You can see we just broke through the first retracement level of 32.45. So we could be looking for a retest of that, as I mentioned before, before heading back down lower. That's definitely a possibility in a scenario. But something that I want to highlight again is going to be the relative strength index. Okay, so take a look at our RSI. And instead of bullish divergence, in this case, we actually had bearish divergence. So notice how we have a high here, right? Lower high, lower high. But on the actual price of the stock, we have highs over here. Okay, then we put in highs over here, and then we put in higher highs over here. So, the price of the stock was heading up in an uptrend, but the relative strength index was losing relative strength, creating lower highs. That's bearish divergence. All right. And we initially broke through this bearish divergence trend line right here, but this appears to be a look above and fail, right? And we're currently retesting it right now. So, buyers were really presented the opportunity to push price higher. And yeah, they were able to do that a little bit, right? But nothing really extraordinary happened there. We went from like $30 up to about 38, not even 38, about 37, right? So a $7 move there. And now we're trading back below this initial bearish divergence trend line. That was a good signal to help us figure out that we were going to have a downside move over here. And another thing I want to point out is if we look at our MACD, okay, let me zoom in on that a little bit more, make it bigger for you guys. Whenever this blue line here crosses below, that's typically considered an exit signal, right? And so we got the exit signal up here, and then there's about a 25 to 28% drop after we got that sell signal. Okay, now here recently we got another MACD sell signal. Now keep in mind, these are the larger time frames. This is the weekly chart, and we've had a pretty significant drop so far, but we haven't gotten another 25 to 28% drop. And if that happens, we could fill this weekly gap here on XLF, taking us back down to about 25.30, 25.50 on XLF. Now, these gaps, they tend to fill about 90 to 90% of the time, which is actually why I just got in. If you guys are in the Discord, you can gain access to all of our entries and exits, but you can see here that I actually got into XLF puts today. Now again, this isn't financial advice. I'm not telling you guys to follow me or anything, but I'm making some plays, and I'm kind of just going over the reasoning of why I'm making these plays. I got into these puts for the analysis here that I am essentially giving you guys right now. Okay. And we get in a lot of other stuff. All right. I did some TLT trades today, quick day trade, got about 16% profits. My Apple puts, I think, are green right now, last time I checked. And and not every play is going to be a winner, right? Like Nvidia, okay, just to be fully transparent, this was a loss for me. Okay. I had some puts here. I did have a call hedge, which minimized the risk. And to help minimize losses. So it was only about a 9.7% loss in total whenever I closed those. And it could have been a lot worse. It could have been a 25% loss if I didn't have these call hedges right here. But yeah, so enough of the Discord stuff. If you guys want to join the Discord, the link's in the description. Use code Zachly to join. Let's go back into the charts. And let's take a look at KRE now, right? And this is the regional bank sector ETF. All right. And so we're looking here on the weekly chart. All right. And we have the same thing pulled up. We have the swing high, swing low to swing high with the fibs. And take a look at what the fibs, at what happened here. We blew right through the 38.2% retracement level. We blew past the 50% retracement level and the 61.8% retracement level. And we filled this gap down on KRE that we needed to fill. Okay. And so just real quick, we'll go back to XLF. And we'll look at the setup, and it's very similar, but it just seems like it could be just now barely getting started, right? We didn't fill the gap down yet. We're still above the 50%. We're still above the 61.8%. But if the financial sector is due for more pain, and there's going to be more bank issues coming across in the future, then this is something that we need to watch out for and we need to pay attention for, is that the XLF chart, there is a possibility it could end up looking like this KRE chart of the small regional banks. So that's pretty much it for today's video. Just kind of wanted to update you guys my thoughts on the financial sector. And hopefully you enjoyed this video. Smash that like button, subscribe to the channel if you guys are new, and I'm out.